Hello, this is Friends the Realtor and welcome back to my Homebuyers University. Most first-time homebuyers will use a FHA loan, and in this video we will go over all the requirements for this FHA loan. Stay tuned. So the Federal Housing Administration, also known as FHA, doesn't have a minimum credit score requirement, but the lender that you will use usually will want to see a credit score of 580 for you to be able to qualify for that 3.5 down payment. Now, if your credit score is below 580, you'll still qualify for a FHA loan, but you will be asked to provide a bigger down payment. Which takes me to my next point. Another requirement of the FHA loan is a minimum down payment of 3.5%. So if you do the math, let's say if you're looking at a house that's priced at $400K, your down payment will be 3.5% of that, which is $14,000. After checking off your credit score and the money you have available for down payment, the third thing the lender will do is calculate your debt to income ratio, which is also known as DTI. And that ratio cannot be more than 43%. How to calculate the DTI? You will take all of your debts and divide it by your income, and that number cannot be more than 43%. So when you look at your breakdown of your monthly payment with a FHA loan, you'll see different items. You will see principal, interest, homeowner's insurance, taxes, private mortgage insurance, and if you have an HOA, you will also see your monthly HOA in there. The fourth requirement of an FHA loan is that PMI, private mortgage insurance, and you'll have to pay that until you reach 20% of equity in your property. It's important to note that there are ways for you to not have to pay that PMI. For example, if from the get-go you put a down payment of 20%, then you don't have to worry about that monthly PMI payment every month. The fifth requirement has to do with the actual property. The property has to be up to a certain standard. It really very much has to be livable. It also has to be in a location that's FHA approved, and that's very important, especially down here in South Florida. Most first-time homebuyers might end up in a property that's inside a HOA community, and some HOA or condo communities do not allow FHA. So it's important to make sure with your realtor that you're seeking a home in an FHA approved community. And also very important, this property has to be your primary residence for 2 years. Requirement number 6 has to do with employment history. The lenders are going to want to see that you have been able to keep a job for at least 2 years. The longer the better, but they want to see at least 2 years of continuous work history. Now, if you have a job change, it is okay as long as it's in the same line of work. So let's say if you were a nurse in 2021 and became a travel nurse in 2022, that's fine. So you just have to keep that in mind when you're thinking about making your plan to purchasing a home. Requirement number 7 is mostly an income requirement. The lender is very much going to want to see that you have steady income coming in, and that's going to help them determine if you're going to be able to repay your monthly payment or not. Requirement number 8 is that you must have a valid social security number, and you have to have a green card. So basically you have to be a US resident. So this is very important for my clients out of Europe or out of Africa. You guys will not be able to qualify for this very particular FHA program, but you'll be able to be eligible for financing using some other loan programs that I can talk about in private or in a different video. But for this very specific FHA program, it's only available to people who have social security numbers and also green cards or US citizens. Item number 9 has to do with the FHA loan limit. Unfortunately, you won't be able to go out there and get any home for any price. There is a FHA loan amount limit. With that being said, how do they calculate that limit? They take the prices of all the homes within a certain area, and once they have that data set, they organize it in order, and then what they do is they find the median value, not the average, the median value. And once they have that, that's what they use as the max loan limit for FHA financing. Now, here in Palm Beach County, the max FHA limit right now in 2023 is almost $558,000, just as a reference. Item number 10 has to do with the FHA home inspection and also the FHA appraisal. Earlier in this video, I told you guys that the house has to be livable. And how do the lender know if this house is livable or not? Your duty as a buyer is to make sure that you have a home inspection on the property. The inspector will go to the house, observe everything, test everything, and give you a report of the status of this home. What's happening with the roof, what's happening with the appliances, what's happening with the plumbing, what's happening with the electrical, the AC, and other things like is there mold in the home or is there termite activity, all of that good stuff. Once you have that report back from the inspector, you send it off to the insurance company, and then the insurance company gives you an insurance policy. If the insurance company doesn't give you an insurance policy, that signals the lender that this house is not insurable, it's not livable, it's no good, and you will not get your FHA financing. In that same line, the lenders are going to send an appraiser to the home to assess the home also and give the bank an opinion of value. They use different methods to come up with that opinion of value, and we can talk about it in the comments or in a different video. But once they have that opinion of value, they send it to the lender, and then the lender analyzes it to make sure that you as the buyer, you're not overpaying for the house and they are not giving you financing for more than they need to, basically. So those are big requirements for a FHA loan. You have to make sure that the home passes the inspection and also appraises. The final requirement for FHA financing that I want to talk to you guys about today is closing costs. You guys remember in item number 2, we talked about how you have to be responsible for the down payment. Well, you also have to be responsible for the closing costs. And the closing costs is once you addition all the costs associated with you getting this loan, for example, prepaid insurance or prepaid HOA fees or prepaid interest, you have to pay the title company and all that good stuff. It's all added up and they are combined. It's called the closing cost. So you have to get ready for that. And in another video, I have shared some tips with you guys on things you can do to help you come up with that down payment and closing cost. With that being said, the seller can contribute up to 6% of your closing cost when you use FHA financing. So closing cost is a requirement, but in some cases you can negotiate for the seller to help you cover your closing costs. Now, don't run out and tell your realtor, hey, make sure I get the 6%, because it's not that easy to get, especially when we are in a very difficult market like here in South Florida. Most sellers, they get a lot of offers, some cash offers, some conventional offers. So you can just show up and expect every seller to be able to help you out with that 6% closing costs. So just keep that in mind. With that being said, that is it for my video on the 10 requirements for FHA loan. I hope that you guys found this video very valuable, and I will see you guys in the next video.